Most traders are trading blind. They are all looking at price, ignoring volume, and wondering why they keep on losing. I'm about to show you one indicator that changed everything for me. The indicator that shows you exactly where institutions are positioning, where price is likely to react, and where the highest probability setups are hiding. This isn't just a lagging indicator. This is real-time market intelligence. Stay with me because by the end of this video, you will never look at your chart the same way again. Hey guys, welcome back once again. If you are new here, I'm Luther and this is Stacking Insights. Here we break down market strategies, trading systems, and tools that actually make money in the forex market, stocks, and beyond. If you are serious about financial growth, hit the subscribe button and let's get started. I want us to kick off with beginner introduction to volume profile. This is going to be essential for beginners who knows nothing about volume profile. I'm going to go through what volume profile is, some key levels in volume profile, and some terminologies you need to know when it comes to volume profile. If you're a pro and you already understand the basics of volume profile, you can skip to the session where I take you guys through a setup that I took last week and how I was able to use volume profile in confluence with market structure to execute that trade, right? So if you're a pro and you already understand the basics of volume profile, you can skip to the market breakdown session. But if you're a beginner, I recommend you stay through this session because you're going to learn a lot. It's not going to be a long session, it's going to be a quick one, but you're going to learn a lot. So let's dive right into it. So the first thing we need to talk about is what is volume profile? How do we understand what volume profile means? Now, volume profile is a tool that shows you where traders are actually buying and selling. Instead of just looking at price levels, it highlights price zones where most trading activity happen and where they least happen. It helps you see the raw footprints of buyers and sellers in the market. And this is what makes volume profile such a very powerful tool, because this time around you're not just looking at candlestick charts, right? You're also looking at the volume, the transaction that is happening behind these candlesticks, and this gives you a strong edge on the market. When you know how to apply the volume profile properly and how to use it properly on the market, it helps to give you a strong edge on the market. Now let's proceed. What is the importance of volume profile? How does volume profile even help you in the first place? Now, volume profile helps you to know where the big boys, institutions, where they are building their positions. It also helps you to know where price is likely to stop. It also helps you to know where price is likely to move quickly. And most importantly, it also helps you to know the best place to trade with confidence. And these are the most important things when it comes to you knowing how to properly use the volume profile, because it gives you a strong edge in the market. Because this time around, you are not just drawing support and resistance blindly. You are drawing support and resistance based on how big boys are pushing themselves, where market has made a lot of transaction. You are looking at these levels. For example, looking at this image that I have here right on the right side of the presentation, you can see that this movement here, when the market started making this series of higher high, higher low, higher high, higher low, higher high, right? This strong bullish momentum to the upside. When you apply your fixed range volume profile, right? When you apply it to this uptrend, you get information on how this market or the transaction that has been going on within this specific range, right? So when you measure it, you can clearly see that we had huge transaction coming right here. Hence, we've seen a spike in our volume profile, right? You can see right after the big impulse, you can see the reason why the market was able to move faster here was because this place was a low volume area, and immediately the market go to a high volume area. You can see the market started correcting a little bit here. You can see because you have a high volume area here, the market started correcting a little bit, right? So let's continue. There are three main levels I look at when it comes to volume profile. The first one is the volume area high, right? Now the volume area high is the top boundary of the major volume zone where price often reacts because market previously shows strong interest there. Now the volume area high is also one of the most important levels whenever you apply your volume profile range on the chart, right? Because the volume profile high shows you the high range of that particular volume zone that you're looking at. And one way that I like using the high volume profile is it's serving as a resistance area, because usually when price moves to the high volume area, buyers and sellers, the buyers begin to think that the market is getting too expensive. So this time around, they want to they start taking their position, they start taking profit, which also allows sellers to also jump in, right? So I like using the volume area high to serve as a resistance zone. Now the next level that I also look at is the volume area low. Now the volume area low is also an opposite of the volume area high, which is the bottom boundary of the major volume zone where price often finds support or reacts due to past trading activity. So this is also the volume area low, right? And like I said, the volume area low and volume area high, pretty similar. These are zones where the market has reacted before. Usually when you look at your volume profile, you will notice that there are huge transactions when you look at your volume area high and the volume area low. Now the next thing that I also look at, which is the last part, is the point of control. The point of control is one of the most important aspects when it comes to you understanding and you being able to use the volume profile effectively. The point of control is the single price level with the highest traded volume, the market most accepted price. Now the point of control has the most transaction, and when you look at the volume profile, you notice that where we have a red line is our point of control. So look at the volume profile just behind it. You can see there were huge orders, right? There were huge orders coming here. And look at all the volume profile that we have here. This place here is where we had the most orders. This place here is where we had the most orders. So one thing you can also see right here is that when the market go to our point of control, you can see the market was correcting here a little bit, and right after the market was able to break above this level, you can see how impulsively the market pushed to the upside. And the reason why the market was able to impulsively push to the upside was because this place was a low volume area, right? So one thing to also keep in mind is that the market moves faster in a low volume area, and the market gets to stall or correct in a high volume area. You can see immediately the market got back to this high volume area, which is a volume area high. You can see there were huge orders here. The market also started correcting a little bit, and you can see the market proceeded from there. So this is actually a very important tool. If you're able to understand and use it well, it's going to give you a profitable edge on the market. Let's proceed. Now the last part that we talk about is the strategy steps, and this is how I'm able to use the volume profile in confluence with market structure to come up with a profitable setup. Now the first step I do is do a top-down analysis from weekly to daily to the 4-hour to understand the overall trend. The second step that I do is apply my volume profile on the chart. So after I'm able to identify the trend of the market by going through my top-down analysis from my weekly, daily, 4-hour to understand where the market is heading to, I then apply my volume profile to the chart to identify my volume area high, my volume area low, and my point of control, because this is also going to give me more information on where the transactions have been happening over the trend. Right now, the fourth step that I do is wait for price to tap into these zones. So I wait for price to do what? To push to these zones that I look at, right? My volume area high, my volume area low, my point of control, and that also depend on the direction of the trend. Now after I wait for price to push into these zones, I look for confirmations and I execute. When it comes to confirmations, I look at things like the candlestick charts, right? The candlestick anatomy. If you understand things like the bullish engulfing candlestick, the pin bar, there's a lot of candlestick formations that you need to learn to be able to determine when momentum is shifting. So this is the last part of the slide. Now the next thing that I want us to do is go right into TradingView, and I want to take you guys through a setup that we took this week and how profitable it was and how we were able to use market structure and confluence and volume profile to take such a profitable setup on gold. Welcome to the second session of this video. Like I said, this is going to be a quick top-down analysis on gold, and I'm about to show you how I was able to use market structure in confluence with the volume profile that I just taught you guys, how I was able to use it to make money on the market. Right now, there are some few things that I need to get to it for the sake of beginners who are watching this video. Right, if you're a complete beginner and don't know how to apply the volume profile, I want to quickly take you guys through that before we do anything else. Right now, for you to locate your volume profile, right, the TradingView likely has embedded that tool into it. Now when you go to this section here on your left toolbar, you can see you have the fixed range volume profile and anchored volume profile. In this video, we're going to focus more on the fixed range volume profile. You can easily add it as a favorite so that you don't need to come here always. You can just see it right on top here. Right now, there are other ways that you can also use the volume profile. Right, there are indicators that can easily plot your volume profile for you on the chart. You don't need to be doing any manual plotting. But I like using it in the lower time frames. Right, so when I go to the, let's say, 1 hour, you can see I have this bunch of lines and chart showing on my chart, and this is a volume profile, right? This is marking the volume profile for the daily price action. So you can see this whole range here that we have here is the daily base price action, right? And within that daily base price action, we get to see the volume area high, volume area low, and point of control as well. So this is doing this for me automatic. Immediately you apply the indicator, you don't need to do this. And I like using this for intraday, right? For scalping intraday on the charts, because I just jump down to my 15 minutes and immediately I know where my point of control is, I know where my volume area high is, I know where all my important area levels are. So I just go there, mark my levels, and start looking for opportunities on the chart, right? If you want to apply this indicator on the chart, you can easily come to indicator, right, and just search for market session volume profile. You can see this is it's made by Leviathan. Sorry, Leviathan Capital. I don't know, I'm sure, but this doing my research, this is the guy that I found this indicator and in the community, and was pretty good, right? So this is it. You can apply this and immediately you do it. You automatically get this on your chart, and there's a lot of customizations that you can do on this. When it comes to inputs, you can change it from daily range to just in the New York. If you are someone that you like trading the sessions, you can apply it to just New York, or weekly, or monthly, quarterly, yearly, London session, Tokyo session. So you have a lot of customizations, right? You can customize a whole bunch of things here based on how you feel comfortable, how you trade, how to get the best edge on the market, right? So let's get right into it. Now that we know how to plot our indicator, volume profile indicator on the chart, we know how to locate our fixed range volume profile. Let's start with our quick top-down analysis from the weekly time frame on gold, and how we were able to capitalize on this setup, right? Let's go. Now, looking at gold on the weekly time frame, we can clearly see that this market has been in an uptrend for a very long time. Looking at this session, you can see a series of higher highs, higher lows, higher high, higher low, higher high, higher low, higher high. You can see the momentum to the upside on gold has been super strong, right? Now, looking at the recent price action, you can clearly see that the market just made a pullback, and right after the pullback, you can see buyers are beginning to take control back of gold and begin to push the market to the upside, right? So clearly, what we can establish on the weekly time frame is the market is in a strong bullish, momentum to the upside. Now, when we come on the weekly, we also get to confirm this momentum to the upside. We can clearly see that this market just pulled back a little bit and from this beautiful W formation, and right after W formation, we saw the market making a huge push to the upside. If you want to see this W formation I'm talking about clearly, when you switch to the line chart, you can see this beautiful W formation, which is a very bullish pattern that whenever it pops up on the market, it means momentum is shifting to the buyer side, right? So now what we can also establish in the daily time frame is that clearly the market is in an uptrend. We can also highlight this a high, right? Our weekly high and weekly low. You can easily get them on daily time frame to understand the range in which you'll be trading in. And one thing you can also see is that this market just broke above this zone here, and you can see beautiful break, retest, and the market started making more continuation to the upside. So clearly on the daily time frame, you can see it's also aligned with what we are seeing on the weekly time frame. Market is in a clear uptrend. Now let's see what else we can get on our 4-hour time frame. For the meantime, let me take this off. On our 4-hour time frame, we can also clearly establish that this market is not showing any signs of weakness, right? You can clearly see right after the break out of this resistance zone, you can see the market making a huge impulsive move to the upside. We are seeing some sort of correcting, the market correcting here a little bit, right? When we're going to get more information on this price action, what do? We can use our volume profile, our fixed range volume profile, to measure this impulsive move here from the low to the high, right? And when you do that, we get more information on the transaction that has been happening behind this movement to the upside, right? The reason why the market was able to make a huge impulsive move to the upside, breaking above this resistance zone that we have here, was because when the market got to this point of control, the market was able to break above and retest. You can see some break and retest of structure, right? You can see break and retest of this point of control here, right? We can also see a huge transaction, right? Let me bring up my pen tool. We can also see huge transactions coming on here, right? And hence when the market was able to break above and retest this zone, we saw buyers coming in here, pushing the market all the way to the upside. And that's one way I like using my volume profile. When I see that the market has broken above a point of control and the market comes back to retest to this point of control, it's a huge, time to actually capitalize on the market. But this move had already happened on the market, and we saw right after it, you saw weakness, and the market made a huge move to the upside, right? You can see the market was able to make this huge move to the upside because this whole zone here was a low volume area, right? So it was a low volume area. That was how the market was able to move impulsively and quickly within this range. Like I said earlier on in the beginning introduction, I said the market moves faster in a low volume area and moves slower in a high volume area, right? Now, one thing that we can also establish right here is that the market just broke and retested, right? This is our volume area high, like we spoke about in the beginning introduction, and the market has just broken above this level and now retesting this level. Immediately the market retested, we are seeing some sort of weakness. You can see pin bar formation, double bottom formation. Like there was a lot of rejection at our volume area high on the break and retest. So understanding that on the weekly time frame we are coming from a bullish trend, on the daily time frame same confirmation bullish, and on the 4 hour seeing a break and retest or into our volume area high, I realized that we could have potential move to the upside, right? And there's a lot of things that I look at in terms of confirming if there is momentum in the market to push in a particular direction. Yeah, so right after I saw this break and retest structure into our volume area high, I knew that we could have price, continue pushing to the upside. So what did I do next? Here, I had to jump on the lower time frames to look for opportunity to the upside. Now, clearly, you can see that this is our indicator, which is our volume profile indicator market session that I showed you guys earlier on. Now, when you come to the day 1 hour time frame, you can clearly see that this market is forming some sort of continuation pattern. When I mean by continuation pattern is when the market is moving in a particular direction, right? The market, this is not what I need, sorry. There's a continuation pattern. Market moves in a particular direction, form this pattern a little bit, and continue on going to the upside, right? This is a continuation pattern, and we can clearly see the market forming that here, push, and we are seeing the market forming this corrective zone. So from here, we could easily establish that the market could easily continue going to the upside, right? So everything, the time frames were in clear alignment. So here I came to the 1 hour time frame. I was looking for a chance to get an entry to the upside. Now looking at our 1 hour time frame, right, and looking at our volume profile on our daily volume profile, you can see that this was on Tuesday, right? Tuesday, the 11th of November, right? And you can clearly see that when the market, this Tuesday's range, you can see that there were level that we had a majority of transactions coming in, which our point of control was right here, where we have a red line. And the next day, which was Wednesday, that followed, you can see that it was the point of control was also just around the same zone, right? So the fact that we're seeing 2 days in a row point of control being the same range, I realized that the market is holding up here in no time. This is the best place for me to look for an entry, because if the market is able to push and break above this level, the market is really going to move very, very fast. But the fact that the market is being held up in a point of control on multiple days from Tuesday, Wednesday, the same level that the market is holding at, I knew that this was the best place for me to look for my entry. So what did I do? I just jumped right on my 30-minute time frame to look for a move to the upside. Now, when I came down to my 30-minute time frame, the next thing that I wanted to do here was to look for candlestick confirmations. Like I said, after I'm done doing my top down analysis, I apply my volume profile to know my volume area high, volume area low. The next thing for me to do here is to look for confirmations, to look for candlestick rejections in my zone. So we've established that this is a zone on the 1 hour time frame. So let's see if you can get any sense of rejection to the upside, right? Okay, so seeing that this beautiful pin bar here, let me show you the pin bar I'm talking about. So look at this beautiful pin bar here, beautiful pin bar that came there. And the fact that we are seeing this, I knew that this was all the confirmation that I needed. I just quickly placed my order right at the close of this candle, placed my stop loss right here, right below this level, and I was gauging at just 1:2, right? Usually I like 1:3, but because of looking at how the market is moving to the upside, I wasn't really trusting that the market was going to move, further. I knew this was going to be a quick in and out, but I didn't expect the market to move much. I was just looking at 1:2, right? A quick 1:2, then I'll be out of the market. But guess how much the market gave me here? Guess how much? Let's see how it plays out. Quickly, we saw this happening. Boom. And I think this was actually a news event. It was a news event that actually, I've forgotten that particular news, but there was something that came to push this market impulsively to the upside. You can see by this time you should know that my trade was already running on a break even, and let's see how this trade plays out. You can see huge impulsive move to the upside, already hitting my 1:2 risk to reward. And looking at how impulsive the market moved to the upside, I was more than happy, taking my take profit right here and just staying out to wait for the next opportunity. Right now, I took 2 trades on gold last week, right? So let me just take you guys to the second setup that I took. That came, I think, on Friday. It was very late, latter part of the week. So let me play it. Let me show you guys exactly the second trade that I took. I'm going on 1 hour. So at this point, I was out of the first trade. I was more than happy with the money that I got on gold. So I was just excited, just waiting for another opportunity. You can see gold was still showing momentum here. If I had still kept my old trade running, I could have even made more money. But I was more than happy taking the first profit that the market gave me, right? So let's see what happens next. So look at this. Look at this. This was on Thursday, right? And on the Thursday's trading period, daily range, you can see that this is the level where we had our point of control, right? This is the level where we had a huge order. So on Friday, when I saw the market pulling back to this point of control, break and retest, I was like, this is a very huge point for me to get a quick pips out of the market. And let's see what happened, right? So here, I was actually busy on Friday, so I just placed a sell limit right here, placed my stop right above this volume area high, and I was looking at squeezing 1:2 right after this trade, right? 2:1, 1:2, whatever you might call it. I was trying to squeeze it out of this trade because it was on Friday and I wasn't expecting the market to move much. Just a quick in and out. The setup was too good. I just couldn't avoid it, and this is also a quick scalp on that I was just going to get out of the market. And look what happened. It was actually a crazy week on gold, right? Look what happened. The market came, tap us into the trade, and see what happened next. A huge move, boom. So I came back somewhere right here, and I was like, damn, this market is actually milking to the downside, right? And right after this huge drop, and I think this was also a news as well. So right after this huge move, and this is from pure experience, because knowing that after markets making huge moves in one direction because of news or anything of that sort, 90% of the time, or let's say 80% of the time, the market retraces back to where it started from. So immediately understanding that I just took my profit, it was on Friday, I was more than happy to keep it and just stay out of the market. So guys, you can see how I was able to use volume profile in confluence with market structure to execute this beautiful trade on gold this week. And it was just these 2 trades that I took on gold this week, nothing more, nothing less, and I was happy just taking these 2 trades and milking the hell out of the market, right? So guys, I hope you enjoyed this video. I don't want to make this video long. If you found this video really resourceful, if you found it really helpful, subscribe to the channel, and I'll see you in the next one. Peace out.